How's it going, traders? David with Alexander Trade and Investment Group. It's been a month since I've done a detailed review of IWM and the last week's movement. Before I get into it, anything that I'm showing you guys can be done no matter what you trade. Everything that trades creates a TPO chart and a footprint. So it doesn't matter whether you trade crypto or futures, forex, or equities like myself. Again, anything that trades creates a footprint, and anything that I do, you can do as well. I'm going to go over each day from the 16th to the 20th. We're going to set up our daily numbers. The weekly I already have pre-set up, and we're going to talk about that right before we get into Monday. But we're going to do my routine that I do every day and every week. Everyone knows that the market is a fluid thing. It's like water. It's not really structured, but you can still find structure in the industry that's not structured. And what I mean by that is you can have a routine that prepares you for the day. A lot of misconception when it comes to trading. Some people will tell you that you can just wake up in the morning, put random lines on the chart called trend lines, and you good to go. You can start making money. That is one of the most false, um, ridiculous things that you can hear. You really have to prepare. Trading is like a job. You're gonna have to prepare like you do at your work. Prepare for the morning, whether there's a morning meeting, morning report, work that you have to perform. Trading is the exact same way. You have to prepare for the day in order to make money. You have to see and analyze the market and market participants and how they moved in order for you to make the best decision on which direction you want to play that day. All right. So to do that, you're gonna have to prepare, and I'm gonna show y'all every day from Monday all the way up to Friday how I prepare. Again, in a industry that's not structured, you can find structure and you can do that every single day. All right, so with that being said, I'm going to go ahead and share my screen. Again, I play IWM, but you can do this for anything that you trade. So I have my weekly numbers already prepared as if this was coming in on Monday morning, the 16th. So I have the weekly number, the extreme high of 217.22. This would have been the week prior to the 16th. So what was that? The ninth to the 13th, I believe it was. Oh, was the 6th to the 13th? Let's go back. It was the ninth to the 13th was the previous week. So we're gonna mark our weekly numbers, which I do. I mark my weekly, here's my TPO, weekly TPO. I mark those numbers on my daily TPO, and on my daily, I mark on my footprint. So when I say the weekly extreme high, I'm talking about the entire week of the ninth to the 16th. All right. And I mark that here in the middle. The weekly extreme high of the ninth through the 16th was 217.22. The poor high or the value high, 217.77 of that week. The PLC, 208.94. The value low or the poor low of that week, 205.92. And the extreme low of the week, September 9th through the 13th, was 204.15. All right. So I do that um really prior to Monday, but I would say at the very least Monday at 8 o'clock or Monday at 8:45. Um, but my daily numbers, which would represent the last trading session, I should say, I do that every single morning. So in this example, we're talking about September 16th. So the last trading day would have been Friday the 13th, and that is this profile here, right? This TPO profile. And again, I mark my daily TPOs on my footprint chart, and I've already pre-marked that. So Friday's extreme high. is 217.22. Friday's poor high or value high, 217 on the dot. POC is 216.26. Poor low is 215.60. And lastly, the extreme low is 213.92. All right. Also, every day is I check or I change my anchor on my VWAP to represent the prior day. So I already have the 13th on there. The last session was Friday the 13th. So that's where I start with. And then I'm prepared for the day. All right. So what happened on Monday? Well, Monday, we opened slightly out of balance of the last session, right? Last session was the 13th. The market actually opened, or IWM actually opened at 1763. You can see the extreme high or the very top of, oh, we got some thunder. The very top of Friday's session was 217.22. So we opened slightly out of balance of last session on Friday. So that's there. We also have VWAP here. So we are actually opening two standard deviations above VWAP. And on top of that, since we are opening out of balance of last session, you need to go into the left to find the next reference point. So being out of balance of the session, this session's reference point is not where you should start, right? Because we above that. We are out of balance. The market is not balanced. So you have to find a reference point where the market was balanced before, right? So if you go over to the left, you will see the next balance point or reference point was actually September 3rd. And in September 3rd, we see single print sell, right? From roughly 219.36 down to 218.08. So I like to mark those single prints on my order flow chart because when the market is actually open, my eye is all the way over to the right. So I use these two to prepare, but when it's time to play, when it's actually action time, my eyes are only here only, right? I'm only looking here. All right, so now we have a single print. We found our reference point, September 3rd. They got a nice single print area there. We are above the high of the week, right? Of the last week. We above the poor high of Friday. We're two standard deviations to the sell side. I mean, that is like multiple confluences to sell the market. That is everything you need to sell the market with no reports on Monday. Yep, Monday had no reports to worry about. This was all the confluences you need, right? Soon as price hit pre-market at 925, we opened at 217.63, so below the area of interest. But when the market opened, prices went up to that area of interest. We see that big area of volume, bigger players are stepping in. The big boys are stepping in. If you've been in the market long enough, you know that the bigger boys can hide a lot. They can hide their orders. They can do iceberg orders and all of that sneaky stuff, right? But what they cannot do is hide volume, right? So as we go into that area of sell that we saw back on the 3rd that I marked in this red box, you see heavy, heavy volume. So that means the bigger boys are stepping in. And what did they do? They sold it down. They sold it way all the way down to the first possible resistance point, which was the weekly, daily extreme high. And it went even further. You see they took some profit there, but they went even further. All right. So that was Monday. All right. So let's move over to Tuesday. And again, I do the exact same thing. The weekly numbers stay the week, right? We don't change the week. We only flip those once at the end of the week or at the beginning of the week, depending on when you're able to get in. But these stay on your chart the entire week. Obviously, the monthly stay on your chart the entire month. But the dailies we change from session to session. We change the daily extremes, value, poor high, poor low, POC. We change those daily, and we also change our VWAP anchor as well. All right. So Tuesday, all right, this was Mondays. All right. So what are we gonna do on each day? We're gonna mark our daily numbers. So I'm gonna mark our poor high. Oh, sorry. Let's start with the extreme high. Extreme high, I'm gonna say roughly 218. Move this out the way. 218.32. And I like to label them daily, extreme high. Okay. Also, we're gonna mark our poor high of Monday, and I have them right here in the middle. So again, I move. This is my daily chart. I mark those on my um footprint. So the poor high is 217.77. And again, I like to label them just so I know what they are. And just to keep it short, I'm gonna do VAH for poor high, or and it's actually for value area high, but depending on who you talk to, poor high. Let's see, POC. I'm gonna say 217.38 daily. That curse out the way. POC. All right, and then our poor low or value low, 216.65. Label that. VAL, value low, area low. And then lastly, our daily extreme low, because like 216.11. And then the very last thing we do is going to anchor. So we're talking about the 17th. So the last session would have been the 16th, 2024, 12:01 a.m. All right, so let's move over to Tuesday. I'll check that so they don't move everything every time. All right, so we on Tuesday, again, open out of balance. We open out of balance of Monday the 16th, right? So whenever we again are out of balance, we have to find a reference points because the market is out of balance. So we need to find an area where the market was balanced. So we have to look over to the left again, and what do we come across? We're coming across the top of Tuesday, September 3rd profile, right? So I'm gonna mark that poor high of September 3rd on that chart. I'm gonna say 9-3 extreme, not a poor, I'm sorry, extreme high of that chart. So we are above on the extreme high. And if we look over on that Tuesday on the weekly chart, there's a single print right here that was actually created on the end of the week, Friday, August the 30th. It's roughly, let me make it a little bigger. Hopefully you guys can see it right there. That's a single print sell right there. And it has the poor high of that week as well. So I'm going to mark that single print, weekly single print on my daily, on my footprint. Cool. All right, so we had our reference point on the weekly. We had our reference point. We had to go back on the daily. And what did the market do? Right. So pre-market, 9:10, we came into that area. There was positive delta, meaning um, buyers with high volume, 22,000. Positive buyers, positive delta, 4,500 buyers on 16 volume, 16,000 volume. 3,000 positive delta, that means positive buyers on 42,000 in volume. You can see the volume is creeping up or positive, but it's not going anywhere, right? You would think if volume is creeping up and there's buyers, then price will skyrocket. But it's actually the opposite of that because we're coming against an area of single point that we located the prior week that told us market participants in this area sold the market. They felt that the price was too high. This is on a weekly TPO. So as prices get up into this area, buyers are buying and buying, not realizing last time that we were there, market participants said this was too high, right? And then we sold down. So not only do we have that single print from the week, we're at the extreme high of the third. We are VWAP is here, one standard deviation, two standard deviation, three standard deviations sell. And I believe we had a report, didn't we? On Tuesday. Yep, we had retail, and I believe retail numbers were bad, but industrial was good. So it was kind of a wash, right? But market participants, as when price got to this area, already told you that prices were too high. Now, this didn't last for a long time, so we're not looking to be in the market and hold all day. We're looking to capture moments. So as price got into that area, we can already see volume is ticking up to sell. Volume is ticking up. Bigger boys are coming in, right? So aggressive buyers are coming up against passive sellers, getting absorbed. And when market opened, we had a nice little drop down. You can kind of argue that the deviation three is the first sign of resistance to take all profit there. If you didn't take it there, then this would definitely been that take all profit. If you didn't get your 20 cent, you guys know by now I'm a 20 cent guy. So this would have probably been 20 cent, if not 15. I'm thinking this would have been 20. That would have been a 20 cent profit. So I would have been out already anyway. If not, then definitely here. All right. So that was a good 5, 10, 15 minutes of profit. Price came back into that area, standard deviation three. Not as heavy of a volume as it was when it first got there, but nevertheless, there was heavy volume coming against passive sellers. 5, 10, maybe 12 minutes of profit right there. You can argue that standard deviation two would have been the first resistance point to take all profit there before it ran away. All right. So that was Tuesday. All right, let's go into Wednesday. Where Wednesday I did not play the market. One, prices were extremely high. I did not feel comfortable playing market, and that's just my preference. Anything over $1 when it comes to option contracts is my preference that I stay away. So I didn't even touch it. And if I'm not mistaken, I believe the spread was kind of crazy as well. And also Wednesday was Fed day, right? You had housing, you had inventory and oil and crude oil, and then you also had Fed, which was great news, but the market didn't play it that way. All right, so let's go into it as Wednesday. Again, I didn't play Wednesday, but we're still gonna do our structured everyday setup as if we were gonna play. All right. So first thing I'm gonna do is I'm gonna do my extremes. I'm gonna do my poor high, my PLC, and my poor low of Tuesday. All right. So since we're down here, let's go ahead and do it. Here is the poor low. I'm gonna say 218.41. Daily extreme low. I don't know why I said poor low. I'm sorry. Extreme low, 218.41. There's also a single print there too. Let's go ahead and mark that. But first, let me do the poor low, 218.68. And then we're gonna mark that single print. So it did have a small single print, but a single print nevertheless right there. Uh, and if I'm not mistaken, I was watching it. I believe we came into that single print and bought up, but again, prices for me were just too expensive. Mark that single print. All right, POC. That is POC of the 17th or high 220.43. Again, this is something I do every single trading morning to set myself up for the day. This allows me to analyze the market and make a good decision or logical decision on possible direction. Doesn't mean you're going to be right 100% of the time, but if you able to prepare for the market ahead and understand the areas of profit or areas of opportunity, I should say, then that will put you ahead of a lot of people, especially retail-minded traders. All right, so that is the daily extreme high of the 17th. I don't know if I did an anchor. Let me see if I anchored. Nope. So let's change the anchor to the 17th, which would mark the session before. All right, so the 18th, Wednesday the 18th. Again, I did not play. That was Fed Day. And like I said, the prices were extremely high, but we opened in balance. So we didn't need to go further to the left to find our reference point. Our reference point was the session before, right? Because we opened in balance of the session before. All right. So we opened 219.23. We are VWAP, standard deviation one buy. This is a POC. So we opened here. Prices came up to looks like the core high of the 18th or 17th and then dropped. So you could have played that. I believe we came into the single print. Yep, yep. See, we came into the single print. And this is the area I was looking to play on Wednesday, but again, prices were extremely high. We are standard deviation one, which hopefully you can see that. It's a little faint. All right, so here's VWAP, standard deviation one. That's single print. Here's hope you guys can see that as well. That is the extreme low of the session before. That is the value low of the session before. So you had all of these confluences, value low, extreme low, single print, deviation. Everything's pointing to buy, right? It just, and that's my, again, that's my preference. And your preference may be anything less, I'll play less than 150 or whatever, right? But for me, it's 100, right? So I didn't play that day because of that, but that would have made that would have made a good profit day. Now you see prices came down, make this a little bigger so you can see it. All right, so prices came down. There was absolutely no interest here, right? No interest to keep prices down. You can see even the buyers stepped in a little early, right? They stepped in a little early and then it drove prices up. You can say that first standard deviation right here, you can make the argument that that would have been a good place to take all profit. You could also make a good, you know, what's it called? Argument that POC would have been a good place to take all profit, right? But, and I wish I would have played that day, but again, my preference, I stick to my rules. Again, structure, right? This is part of my structure. I stay out of the market if prices are too extreme. And I believe it was like before cash, I believe it was like $455, and I think it dropped to like 120 if I'm thinking about this day. I think that was about as high as it was. And maybe think about another day, but it was high. All right. So that was Wednesday. Okay. All right. So we're gonna move on to Thursday. Thursday, we were almost out of balance. Right. Here's Thursday here. Right. So first thing we're gonna do, as always, our same daily routine. I'm gonna mark the poor. I'm sorry, the Wednesday. I'm gonna mark go all the way back down. I'm gonna mark the poor low of Wednesday, the value low, the poor low, the extreme low, POC, poor high and extreme high. So extreme low of Wednesday would be, let's see, roughly 218.29. Always, this is my preference. I just put daily extreme low. You can label it whatever you want. All right. And then the 218.48 is the poor low or value low. Daily, and just for this video, I'm gonna put VAL for value area low. POC of the 18th, and I'm gonna say roughly 219.19. All the way up to poor high or value high 221.88. My phone keeps going off. Yeah, sorry about that, guys. Okay. So that is 221.88. And then the extreme high of the 18th with single print, I'm gonna say roughly 224.97. It's gonna be a daily extreme high. And then there's a single print in there. If you guys can see that, let me make it a little bigger. There's a single print right there from 224.97 down to 224.41. So I'm gonna mark that right at the single print. And I'm gonna say 224.43. Okay. And then lastly, we're gonna anchor our VWAP to represent the last session. So that was the 18th. Okay. And then on Thursday, we did have a report. We had jobless, which was a great report, right? And I think, yep, jobless. We have jobless and then homes, but we would have been done before homes. So jobless came out to be a great report. We knocked off 12,000 in claims and it went down to 219,000 from 231. So great report. That doesn't mean that the market is going to go up, especially after what happened on the 18th when Fed announced the 50 basis point cut, but the market still dropped. All right. So we have everything set up. Let's go over to Thursday. And as this move over, let me check because my phone was blowing up. Hold on one second. I'm sorry. Sorry. So I can't ignore wifey, man. Wifey calls repeatedly. I gotta check to make sure everything all right. All right. So we go over to Thursday, and you can already see what happened. And why did it happen? One, there was a single print sale. Let me make it a little bigger from the 18th. Single print sale right there, right? I marked it on my daily chart. We are also VWAP standard deviation one, standard deviation two. That's another confluence along with the single print. Only thing we didn't have as far as a confluence is the report, right? The jobless reports was actually great. It was really great. It was awesome. Actually, RPI actually matched the report this time. And it actually was really, really great news. But other market participants, what did they do on Tuesday? Oh, I'm sorry, on Wednesday. They felt that IWM at 224.94 was way too expensive. And look where we are though, right? In this single print area, right? Single print area. We are also at the monthly extreme high right there. So not only do you have that, but you have single prints. They telling you, other participants are telling you that the prices are too high. So when we come into pre-market, right here's 910, volume is kicking in. The bigger boys are stepping in. Like they're stepping in to say this is too high as well. 915, 920, 925, and then we drop. All right. First place of resistance, standard deviation, this is two, one. Standard deviation one, a good place to take all profits. All right. All right. Lastly, let's do Friday. Friday the 19th. Oh, was it Friday? Oh, we just did Thursday. I'm sorry, Thursday the 19th. We're gonna do Friday the 20th. All right. First thing we're gonna do is reset our daily numbers to reflect the 19th. So we're gonna do our poor high. Poor high of the 19th was 224.68 roughly. Our extreme high, I'm sorry, 224.68. Our poor high of 224.20. I don't know why I get those mixed up a lot. So the poor high is 224.20. Again, I'm just going to put VAH for value area high, depending on who you talk to. Poor high. Okay, cool. So everything is good with wifey. When wifey blow up the phone like that, you got to make sure everything's good. POC of last profile, which was Thursday the 19th, was roughly 223.40. Uh, daily POC. Okay. The daily poor low, 222.92. L for value area low. And then lastly, I seen a single print down there. That is roughly extreme low is 221.51 roughly. The extreme low. And I don't know if you guys noticed that, but there was a single print created that Thursday right there, roughly between, let me mark it. Say about 222.09 all the way down to the extreme low, 221.91. 221.51, I'm sorry. I'm gonna mark that green because that's an area to buy. And then we're going to, if I didn't do it already, change the VWAP to represent the 19th. Last session, apply. All right. So this is the 20th, and you can already see what happened. Blah, 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 blah. And then news. So we have news on Friday? No, we have absolutely no news on Friday. All right. So what happened, right? So the market opened kind of in the POC area. If I haven't explained already, we play the extremes. We don't play the POC. POC for you guys who don't know is when buyers and sellers agree on price the most, right? So, you don't want to play where they agreed. You want to play areas where market did not agree, whether it was they didn't agree that prices were too high, or they agreed that prices shouldn't be as high at whatever number it would be, or they didn't agree that prices shouldn't go as low, right? So it shouldn't be as cheap as they were. And this could be example of the buyer area that we're talking about, the far as cheap. So open price on Friday open in the POC area. So automatically, I know that this is not an area I'm going to play. It was also confluence with the POC of Tuesday. So you could argue, which would have been a good argument, that POC down because it was a or agreement on 18th. Eh, no. Not it doesn't make. I'm sorry, not the 18th, the 19th. Again, I don't play POCs. That's where they agree, right? We want to play the reversals of where they didn't, where the market does not agree. Whether it's the buyers, they don't agree that prices should go down any lower, so they buying up, or the sellers doesn't that don't agree that prices shouldn't go any higher, and then they're selling. So Friday we opened at let me see if I can move it so I can see it. We opened 223.45. Prices dropped all the way down. Here's standard deviation one to buy, standard deviation two with VWAP up the top. And this was a very, very quick one. If you guys seen my video on Friday, I only made half a goal. But when prices came into this area, you can see buyers kind of stepped in kind of early here, right? But as prices is dropping into this single print, standard deviation two, volume is getting less and less, right? Here's candle. This candle opened 222.25. It came into single print, less and less volume, meaning no interest in keeping prices down there. And then they stepped up and they bought, and then they bought, right? So you could argue if you'd have caught that single print up, you could argue that standard deviation one would have been a good place to take all profits because that would have been the first place of resistance. Or you can argue that the value area low or poor low would have been a nice place to take all profits. Either way, you would have been right because price came up into the um to the standard deviation one to take first profits. And then it also went up to value area low, the second place of resistance to take all profits. And if I'm not mistaken, I think I gave it a second opportunity. Yep, it did. Because I remember actually talking about this in the video. The buyers created a wall here. If y'all can see it, right? As prices come back down into single print, look at the bigger boy stepping in. 102,000 in volume, 122,000 in volume, 104,000. 111, 91, 80, 78. I mean, they defended this area. They did not feel like other market participants did not feel like IWM should go any cheaper, right? This is a great place to buy. And what did they do? When the sellers finally gave up, took off, right? So you would have said this would have been the first place of resistance, standard deviation one back up to daily value low or poor low would have been the second place of to take all profits, and then profits I think turned into a reversal, right? Yep, it turned into a reversal, and that was it. So this is the area that I caught. I caught this area, what gave me half a goal. Yeah, I don't by now that I'm a 20 cent guy, so half of that's 10 before knocking me out, and that this candle actually knocked me out of it. So. Uh, I think it was that candle. But anyway, I ended up getting knocked out in my second half, which is fine. But this right here, and looking back on it, I wish I would have played it because that reward right there would have been perfect. But I didn't. It created a wall. Buyers created a wall right here, right at the single. That's a confluence. Standard deviation two, volume, and single print, all good, all good. All right, guys, that is the end, man. We went over every day last week, Monday the 16th, all the way to Friday the 20th. We talked about each day's movement. We marked our dailies for each day as well as our anchor. And we were able to see how price moved from those areas. Again, I'm sorry I didn't explain this at the beginning, but we play extremes, right? We don't touch the POCs because again, POC is where buyer and sellers agreed the most. We're not looking for agreements. We're looking for moves away from areas where they did not agree. Whether they didn't agree that prices shouldn't be as high as they were, so they start to sell. Um, or they didn't agree that prices should be as low as they are and they start to buy, right? There's a good place to buy and a good place to sell. All right, as always, guys, I hope my videos give you guys value. I hope it helps you learn about the markets even more. Um, As always, if you have any questions, don't hesitate to leave a comment. Most of you guys have some of you guys have my personal cell, and a lot of you guys are on my other social media platforms as well. So, with that being said, hope you guys have a great rest of your weekend. Have a great upcoming week, and I'll talk to y'all soon. Until next time, peace.